Hello and welcome to IndianExpress.com. Just 3 weeks after government's demonetisation move, the Parliament today saw another amendment being made in the Income Tax Act, which was set by the Finance Ministry. To discuss these amendments and what it means in the light of the demonetisation move, I'm joined by my colleague Sunny Verma to throw some more light on what this means. First of all, Sunny, we understand how the Finance Ministry introduced these amendments in the Income Tax Act, and we do understand how a new window has also been formed under the Income Tax Declaration scheme, which ended on September 30th for anybody who wants to disclose their income. What does this new window really mean?
So the government has announced Pradhan, Mantri, Garib, Kalyan Yojana, under which if you have any undisclosed income, you can pay 50% tax on that and then come clean. Another caveat is that after paying 50%, 25% out of the total money has to be deposited as interest-free deposit with the government. So basically you are left with 25% for your own usage, but you can be spared of penal consequences. So that is the new window.
So in that case, if a person is found violating a lot of income tax laws, what are the kind of amendments that was proposed by the government to curb such disclosures?
So besides the window for declaration, the government has increased penalties and taxes sharply in various cases. There are two main cases. For example, if you have been found depositing your cash in somebody else's account, or there is an unexplained credit or investment into other accounts, so the tax department can charge up to 85% of the total deposits in that case. So that 85% is divided into 60% taxes and other surcharges and penalties, which are at the discretion of the tax officer. And then there is a second category wherein the income tax department conducts surveys and searches at your business premises or houses, and therein they can levy up to 90%, which comprises of 30% tax and 60% of on income which is not declared. So up to 90% they can charge.
So, but why was there a need in the first place to come up with these amendments?
So the existing laws enable taxmen to impose penalty of up to 200% on misreported income. But the problem there is that if you say this year, if you declare 5 lakh rupees as your income and pay taxes on it, advance taxes on it, then they cannot do anything. They cannot levy a penalty. So the government feared that people may show an increase in income from 5 lakhs to 10 lakhs and pay taxes and get away with it. So to overcome that loophole in tax laws, they have introduced these amendments to get legal backing, wherein they can impose taxes and penalties on abrupt jump in income or people depositing incomes, cash into other people's accounts.
Right, thank you so much, Sunny, for giving us details on the amendments that was brought by the Finance Ministry in the Lok Sabha today as far as the Income Tax Act is concerned. For more news and updates, log on to IndianExpress.com.